For more on this, we're joined by Jameel Ahmad in Dubai. He's Chief Analyst at GTC. Good to have you back on the programme with us, Jameel. Now, US jobs growth rebounded in November while the unemployment rate unexpectedly rose. What signal is that sending markets on the health of the US economy?
Mixed signals, to be honest with you, because as you correctly pointed out, the unemployment rate jumped up to its highest level since approximately late 2021. But at the same time, the number of jobs added to the US economy last month was somewhat more than what was expected. I think we have to look at US economic data as a whole, to be honest with you, with a glass half full approach, because we did just come back off the longest government shutdown in history. We know there's problems with economic data, which could be distorted, and potentially we're not going to see clear trends with economic data that we can trust in the United States up until early 2026. At the end of the day, does this data really change the outlook for US interest rate expectations? Not particularly. But if we continue to see more disappointing headlines with data, we're going to start to see expectations the US Federal Reserve will cut interest rates early 2026 increase. Personally, I don't see the first interest rate cut for next year happening until March or April at the earliest. Again, this can change depending on how we get the economic data, and also depending on who the new chair of the US Federal Reserve will be nominated by President Trump anytime soon. That would also provide some sensitivities to financial markets.
Right. Meanwhile, oil prices have jumped following Donald Trump's total and complete blockade on Venezuelan oil tankers. What impact could these geopolitical tensions have on an already struggling oil market?
I see it as a limited impact, to be honest with you, maybe some near-term price movements. But as you pointed out, the oil price has fallen to its lowest level in a number of years. You have some optimism still out there that Russia and Ukraine will sign some sort of peace agreement. But I think the number one factor right now is this combination between an oversupply in the market and not enough demand for the commodity. You've even got think tanks such as the OECD have come out recently to say that economic growth in 2026 is likely to be even weaker than 2025. We're only looking at a global economic picture of around 3% growth next year. It's not that much of a alarm bell, but it's enough to say that we're not going to really see much demand for commodities, which also means that oil prices should remain weak. I still see oil prices remaining somewhere around that mid-$50 handle. It wouldn't surprise me if we do even fall below $50 if we see really weak economic growth picture. But generally speaking, oil prices are likely to remain subdued and stable around these current levels.
Looking at other commodities, gold prices have jumped exponentially in 2025. Could we see gold finish the year above $4,400?
My personal opinion is that gold prices are completely overinflated, and it's like a balloon that at some point we should be letting some air out of the balloon. But ultimately, all of the different uncertain themes that have promoted this incredible drive for safe havens, such as the US economic picture with uncertainty, global trade tensions, what might happen with the Federal Reserve and US interest rate policy, and so forth. Those themes are still out there, and they're unlikely to go away, particularly when it comes to US President Donald Trump being so vocal and opinionated in public about US interest rate policy. Again, the biggest theme we're looking at for 2026 is who will replace current Fed Chair Jerome Powell. That nomination's coming in anytime soon, and if it is a Trump ally who follows that train of thought of being so public about interest rate expectations, suggests that interest rates should be as much as 2 percentage points lower than their current levels, that's going to drive uncertainty in financial markets and sensitivities. And on that outlook alone, that yes, gold prices are unrealistically too high, but they could get even higher should that US interest rate policy picture come even more into the paint.
Very interesting analysis there. Jameel Ahmad in Dubai, thank you very much as always.